Hi, everyone. So basically, we are happy to welcome you here, and we are having now a panel discussion for half an hour about how investors source their deals and how they do co-investments. And after that, we will put all startups into breakout rooms with other investors who wanted to meet with them, and they will pitch in front of those investors. So for the moment, I would like to introduce myself, then Victoria will introduce herself, and then we ask each panelist to introduce himself for a couple of minutes, and then we start the discussion and hope that the rest will join in the course.
Perfect. Rabab, can you please turn off your mic and turn off your camera?
Victoria, she is the panelist.
Oh, I'm sorry. Okay, hi.
Yeah, so basically we will, so I'm Elena Gusakova. I'm a founder of Astra Global. Astra Global is a business development company, and we help startups raise money. I have a background in M&A transactions as an M&A lawyer, and we also help with deal structuring. Victoria, please introduce yourself.
Hi, everybody. My name is Victoria Yampolsky, and I run the Startup Station. The Startup Station is an education and consulting company for early stage startups, where we help you to prepare your financials and your storyline from the financial point of view for fundraising. And now it gives me a great pleasure to introduce our panelists. I'm going to begin with Bob Sweeney. Bob has from Global Health Impact Fund. Bob has over 35 years of experience building and operating technology companies as a CEO, senior manager, partner, and board member. He has led and invested in numerous early stage companies individually or as a member of an investment group. Mr. Sweeney has provided management, operational, strategic services to a number of leading healthcare organizations, including CEP America, Medicus Medical Group, Team Health, and Challenger Corporations, where he served as a CEO for 15 years. Sweeney has 2 exits on record. He personally raised over $10 million from individual clinicians during his tenure at Challenger. He is also the author of 3 published books and dozens of journals and professional articles, and has spoken at over a dozen national assemblies. It's a great pleasure to have you here with us, Bob. Next, I have Michael Spitz from venture capital Zook. And I'm sorry if I'm going to butcher this name. Zukunft Tourist. Is this correct, Michael?
I represent Zukunftstourist. Yeah, it's a tourist of the future. So basically, real quick. So I'm the CEO of Incubator and also a managing director of Commerzbank. So I'm the R&D division and corporate venture capital arm of Commerzbank, which is the 2nd largest bank in Germany. We looked at more than 4,000 startups. We invested in 45 in total. Got currently 380 million under management, and again, which puts us with 45 investors right after sitting Goldman Sachs, number 3 in the world, number 1 in Europe, and early stage. So C to Series A is what we look at.
Wonderful. And Rabab, please introduce yourself as well. Welcome to the panel.
Yeah, thank you very much. Not remotely as experienced as the other investors on the call, so I'm sure I will learn a lot as well. But my name is Rabab, and I'm from Earlybird Venture Capital. We're a German-based venture capital fund. We basically invest in digital tech across Europe, and we also have a dedicated health fund stream. I'm part of the healthcare investment team, and we invest across the healthcare sector and with a big focus on patient outcome. Something very special about Earlybird Health is that we have a public health insurer as a cornerstone investor. We invest from seed to Series C. We have done from our current fund 11 investments and are closing the last few investments as well. We are also at the moment raising a new Earlybird Health fund, which we're hoping to close by Q2 2021. So fingers crossed.
Wonderful, wonderful. Welcome everybody to the panel. So today we're focusing on a discussion of pipeline development and specifically the subject of co-investments. And I think just to start our conversation with, I'm just going to ask you a question. If you are considering a co-investing, right? Or if you are looking for a co-investor, what are the main criteria that you would be looking for? What makes a good co-investor? If you guys want to share your thoughts.
Michael, why don't you go first? You're the most experienced person here.
I think it really depends because first of all, most of the lead that we see is very often, where does the various investors add value? It depends on the rest of the portfolio. For us, if we're talking seed and Series A, it's predominantly to what extent we can bring it into also into the organization. So can we help an integration of the startup solution into the bank, into Commerzbank or other banks, financial institutions? Can we bring it into the client franchise? And at the same time, we are different areas that they add value. Very often, I think we now work with, I think 26, 27 different investors together. I think we even got one co-investment with Earlybird, so we've done a little bit there as well. I think depending on who takes the lead, because there's always going to be someone who ultimately takes the lead negotiation, and if the interests are aligned, I think probably in Germany you have a bit of a special situation because we got someone like Hightech Gründer who takes a very special, let's say, almost government-owned position, who are very often in there, and they sometimes ask us to join them. And you have some others, we do quite some bit, as I said, with Earlybird. Then there's some others who see us as their main competitor, then we don't co-invest. But I think at the moment we really are very open, and depends on the capacity, and if we share the same vision. And as we are predominantly, I would say 40% of our funnel is actually referred to by other investors. So it's very important that we have a good relationship with them.
Wonderful, wonderful. So it sounds like that you have to be able to contribute something to the deal, and that you have to share the same vision. And in fact, you prefer referrals from other investors that lends a deal a certain level of credibility, right? From your perspective.
I can speak from the healthcare and medical area, which is where my specialty is. In our area, there's some kind of unique considerations. So we have co-invested with larger organizations. Obviously, there's a financial reason to do that. Sometimes a deal's so big, you want to have somebody else in it to share the burden of investment. You need to have somebody, of course, in that organization who's a champion for what you're doing, or a champion for the company you're investing in. But the other thing about investing in healthcare, we've co-invested in situations where the other organizations, the larger organizations than us, want us in as the lead investor because of our due diligence function. So we're an organization that's comprised largely of high-level physicians practicing in the United States and elsewhere. If you're looking at if you're looking at an investment prospect, the first thing that we and any larger organization wants to do is verify that the project will not only work, but it will be accepted by users. So if you have this kind of organization on one side serving as the due diligence function, and other organizations serving as a broad source of funding, it works very well. Of course, it has to be the right companies.
Right. Rabab, do you have any thoughts that you want to?
I will actually echo what the other two people said, and especially Michael. I think we always look for value-adding co-investors. As Earlybird Health, we never invest on our own, really. We always look for syndicate partners. And most of the time, these are people who can add something beyond the financial aspect to the companies, because obviously for the time when we're on the board for the company, and we always do have a board seat, we really go deep, and we try to help the companies throughout their lifetime, and we really want to add value in that sense.
And when you're looking at a company, if you have a choice between becoming a lead investor versus being a co-investor, what are your motivations in each situation? What would make you want to lead, as opposed to what, if you have the choice, want to make you co-invest? Just curious.
I think I can start with this one. To be honest, the decision between being co-lead and lead really depends on the round itself, the size of the round, and the other co-investors and how much they're willing to put into it. And potentially at the moment, for example, the size of the fund that we have for Earlybird, there is a certain size of the ticket that we're willing to deploy in the first instance. And again, if you take into account the size of the round itself and who we're investing with, then that all takes a part. But at the end of the day, whether we lead or co-lead, that's not the main issue. The thing that we really stress on is having a board seat so that we're very involved in the management of the company.
Thank you. Anybody else wants to share any thoughts on, your motivations behind becoming a lead investor versus a co-investor?
And irrespective whether we're investing from Mining Incubator or from Commerzbank, we always try, we're not taking more than 24.9% for accounting and consolidation purposes. Our sweet spot is like 10%. So from that point of view, it's not so much whether we're the lead investor or not. It really depends where we add the most value. In the very early stage, it's quite often whether we have to, that the first round we have to clean up the cap table because there's still the old cousin in there, the friend of an ex-boyfriend, and so on and so forth. So the way I always pronounce it is we are basically helping the transition to Series B. So from an idea, and they've already get the first traction. So our role is to do that. And there are quite a lot of other co-investors that have the same spirit. So it doesn't really matter if we take the lead or they take the lead. It's much more the question, are our interests aligned and are we actually helping the company to grow? Because it's very often that there's still some, let's say, some question marks at that stage, and maybe they even shift their strategy a little bit because we are very early. But as we build into the right team and the interests are aligned, that becomes in particular true when we go to the level of exit very early on, which is predominantly then strategic, or for us sometimes handing it on either to Commerzbank or to Digital Plus Partners or any of the rather larger Series B investors, or even then to the next level.
Thank you. Bob, do you want to share anything? Or
no, I agree with what both of my colleagues had to say. I think in our case, it varies a little because the nature of our company puts us in a situation where we're serving most of the time as the due diligence source because of the clinical nature of our organization. And when you're investing in healthcare and medicine, that's really salient. Even very bad. I mean, one of our co-investors is Samsung Ventures, and of course they don't need us on a financial basis, but we've served as a co-investor or lead with them in places where they want to be sure that the physician audience, the consumer audience, will actually use the thing. So, we always look for a board seat or a compensated advisory role. Compensated not because we actually need the money, but because if somebody's paying you, then they pay attention to what you have to say. I agree completely. I mean, I like the way Michael articulated it. We're kind of coaching people to be eligible for Series B. So.
Yeah, absolutely. I think we all know that it's one thing to have an idea and develop a product or even get validation, but the skills necessary to take the company through different stages vary. And unless you've gone through this process before and you have a lot of experience, it helps to have the coaching to avoid the mistakes. And so it sounds like that all of you already have kind of a network of co-investors that you work with. And as you're looking for a deal, do you typically go to your existing network, or when do you go, I guess, outside when it's a really big deal or where you need a certain expertise? When do you go outside your existing co-investors network to look for a partner?
First of all, hi, everyone. This is Michael from Flashpoint. Glad to see you.
Hi. Hi, welcome to the panel. Please introduce yourself. It's great to have you. I'm Victoria.
Apologies for being slightly late. So I'm the managing partner of Flashpoint Venture Capital. We're a Series A focused venture firm with offices across Central and Eastern Europe and Tel Aviv and headquarters in London. We basically focus on founders who originate from Central and Eastern Europe or Israel, and we're looking to build global businesses. Mostly we help them in their endeavor to get from Series A, where we lead, to Series B, where our objective is to support them. Our take on being a lead investor is that we're a lead investor in all of the Series A transactions that we do. It's just the nature of who we are. We are always leading the due diligence effort and always working very closely with the companies and always taking a board seat. So inherently, if you want to be this close to the founder, you have to be leading a transaction. But almost, I think in 95% of all of the deals that we do them with co-investors. And we very much like to work with co-investors. And actually, interestingly, most of the time, it's the founders who help to compose the round, right? So they usually suggest the co-investors with whom they would like us to work, because often they already have some people in mind. And it's also about definitely the value that each co-investor could bring to the deal, to the company, to the consortium, right? So you're looking for people who can add at the table, either through their network or through their industry knowledge or through some other expertise that they can bring to the table. And I think definitely many founders also think about later rounds, right? So when they try to compose a consortium for the Series A, they're already thinking, okay, what will I do in my Series B? So these are the thoughts that people should have at the time. And I think, you know, when you're a lead investor, you have to be still extremely flexible and be ready to work with everyone, so long as they bring something valuable to the table.
But so your strategy is to always be the lead investor. Is that because you want to get a better handle on the due diligence and on the term sheet, or under which conditions would you be willing to co-invest, for example? Or why is it such a core, I guess, being a lead investor, why is it such a core factor of your strategy?
We like to set the price and the terms, right? We believe that we need to have the ability to set the price. Obviously, we're happy to co-lead. And we had examples of situations when we do a deal together with someone and we'll just share the due diligence work, right? And exchange sort of the due diligence work. So we can do that, but we definitely need to set the price. You know, we just feel that in our line of business, when you're looking at, you know, more than 1,000 companies a year, we look at almost 1,500 companies a year. You know, you basically have to have the conviction and belief if you want to invest into a company. And if you do have the conviction and belief, you have to have the opportunity to formulate the terms that are right.
Right. Right. And so, you know, the topic of our discussion, right, is getting some of the deal flow from your co-investors, right? I guess regardless of whether you're going to set the terms or not set the terms. And I guess for all of you guys, I think Michael Spitz said that for you, it's about 40% of your pipeline comes from co-investors. How does it look for the rest of you? How important are your partners, your co-investing partners, for bringing deal flow?
Well, they can be important. This is Bob. They can be important. You know, we have a lot of deal flow just because of the nature of what we do and the pedigree of the physician pool that works with us. But if you know, obviously these larger companies can provide leads for us, and they do, and that's a very qualified lead because they've already done the due diligence of their own, and it just makes it saves time and makes it more reliable for us to go that way. We don't do it that much. You know, we have a lot of, most of the time we are either the lead investor or the sole investor, but we do get leads from large companies like that, and they're qualified ones.
Thank you. Rabab, do you have any thoughts to share in terms of how useful is this deal source for you guys from your investing partners, or do you prefer to source the startups yourself?
So just about Earlybird Health, obviously Earlybird has a tech part and a health part. And for Earlybird Health, we have, as I said, we have 11 and we're doing our 12th investment, and actually 11 out of the 12th are from our network. So there was only one that came to us, not from someone that we know. So I think the network connection is very important because we also find a big value in the due diligence they've done, also the experience with the teams that have come through, and their knowledge about the company perhaps before it's come to us.
Thank you. And Mihaly.
Yes, I mean, look, we do drive a large portion of our pipeline ourselves. right? So we're trying to be very proactive, but definitely I'd say that probably 15 to 20% of all of the companies that we look at come through referrals by other VCs. We work a lot, and in our region in Central and Eastern Europe, this is, I think, a very interesting feature of the market in general, that there are a lot of seed funds which are supported by the European Investment Fund, essentially by the European Union, right? And for many of these funds, we're basically a next investor. So they essentially reach out to us and show the best companies in their portfolio, and they would like us to do a Series A and follow on themselves as a co-investor in that Series A, right? So this is a very important channel of pipeline for us.
Thank you. And as you're thinking, you know, in terms of like, where does your deal flow come from right now, in terms of like different deal sources, what would you say, you know, what are the three main deal sources in the order of, you know, decrease in importance? Or if you only have two or whatever, what are the, if you had three, what would they be?
It's probably throughout most of the time it's the serial entrepreneurs that come directly to us. I think if you want to do something in financial services and even ESG in Germany, we're probably going to be your top 5 call. I mean, if you're number 3 in the world, number 1 in Europe, in the fintech space, you normally get a call. It's relatively clear. Secondly, I would say a referral by other co-investors. And then the minority part is via the franchise of Commerzbank, being the second largest bank. If someone walks into the branch and says, I have an idea, can I talk to your venture capital guys? It gets referred, but that's say below 10%.
Thank you. How about Bob, you?
Can you say the question again? I didn't quite hear it.
What are the three main deal flow sources for you in order of decreasing importance, from most important to least important?
Number 1 is clinical entrepreneurs, people that are in medicine or healthcare that come directly to us. The reason for that is that, and my co-founding partner, who a prominent San Francisco area serial entrepreneur who is a physician, know literally thousands of physicians and hundreds of organizations in the United States. And so they'll come directly to us. That's our primary source. Secondary source would either be current clients or current advisors to those clients. And thirdly would be co-investing firms.
Thank you. Thank you. And Rabab?
I think we get a lot, as I said, from our network. We also get a lot of founders who just reach out to us, really. I mean, we see probably about 1,600 healthcare companies a year, and a lot of it is returns who we've seen perhaps a year ago or 2 years ago who come back to us for us to review their companies again. And I mean, the ecosystem, we try to be fairly active in different countries in Europe. Obviously in Germany, Earlybird is very well known. We try to do a fair bit in the UK because it's there are very well known and big biotech hubs there, similar to Netherlands, Belgium, and France. So we try to be active as much as possible, really.
Thank you. Thank you. And Mihaly, how about you?
Yes, so on our end, I can sort of echo the sentiment, right? I think about 20% of our pipeline probably comes from seed funds. So basically people who invest earlier stage than us and are trying to get us involved in the companies. Probably sort of 40% comes either directly from founders, and this also includes the people who return, right? So people with whom we talked before, you know, we have a database. We basically track people, and we actually we try to stay in touch with interesting companies and reach out to them once a quarter, once semi-annually at least, to see how they're progressing. And then another 40% comes just from research work that we do, right? So we're trying to be quite active in terms of research work. In our regions, I think of sort of Eastern Europe specifically, you know, some of the founders are not proactive themselves as much as they are maybe in the States or in sort of developed markets, right? And it happens to us quite often that we knock on someone's door and we're the first people with whom they ever spoke from the venture community, which is usually quite refreshing, I have to say.
Wow, it's extremely, I think, uncommon for a U.S. venture fund to do.
That's different.
Oh, and I've never, this must be a very different situation in Europe than it is in the US, I think. And I'm quite surprised that such a large percentage for you guys comes from just founders reaching out directly. And is it just cold outreach or is it warm intros?
We do a lot of, you can call it cold outreach, right? But basically we find these people somewhere in lists. We see that, you know, their app is doing well or their website is doing well, right? And sort of we reach out to them either through LinkedIn or through other sort of, if we see any people who know them, whom we know. There are also a lot of founder communities in Eastern Europe, and, you know, we touch with these founder communities, and you sometimes meet good founders through these communities. But we try to do a lot of such work, and basically, you know, we'd look at the sector or at the business model, and if we believe that this business model is interesting or sector, then we try to see, okay, is there anyone from Eastern Europe, Central and Eastern Europe, who's trying to do anything in this sector? And then you just approach them, and people are very open, and they're very happy that, you know, someone is looking to talk to them, especially with a view to give them money.
Well, of course, I mean, this is a dream come true, you know. I mean, I think if this was possible for a US entrepreneur where a venture fund would knock on their door and say, hey, I want to invest in you, I think this, I don't know what that would mean for them.
I think our ecosystem...
That's like, they've made it already.
Yes. I think, you know, our ecosystem in Central and Eastern Europe is still very nascent. I mean, there are quite large regional differences, right? So Israel is super developed, and, you know, we have an office in Israel and we're very active in Israel, but then you get some other countries which are lagging behind, you know, like I don't know, I wouldn't single out any countries because I don't want to offend anyone, but there are countries which are really nascent in terms of like the local ecosystem. So you basically, you know, try to work with the angel communities that they have, and sort of, you know, with all of the startup events that they host, just to be a part of this community.
Right. And I mean, even within the US, I'm based in New York City. Obviously, New York City has a lot of stuff going on, and it's become the startup alley as opposed to Silicon Alley, as opposed to Silicon Valley and California. But there, you know, there is a lot of variability even within the United States in terms of how active, how deep the startup ecosystem is. And now, you know, there's, you know, more and more cities which becoming more and more active. For example, we have Flavia here from Chicago, and Chicago has become a pretty important part in the startup ecosystem too. But I actually have my last question, because we're running out of time. And my last question is, out of the founders, guys, who reach out to you directly, and I understand this is an important part of deal flow for you, which percentage, how would you split it between cold interest versus coming from somebody who you know?
Say it again. I wasn't artist.
What I'm asking is, out of the founders, so you have some of the deal flow that comes directly from founders, they reach out to you, right? And then some of them will reach out to you themselves or through an introduction. How would that be split in terms of like your deal flow?
Well, I think we need to make a distinction between just deal flow and quality deal flow.
Quality deal flow. Let's talk about quality deal flow.
Yeah. So quality deal flow comes from good introductions in my sort of experience, right? So a lot of founders who sort of worked with us or tried to work with us bring other founders, right? Those are quality introductions. Or VCs bring, as I said, these seed investors sometimes bring companies. These are quality introductions because these people, they understand what we're looking for, right? Usually when people sort of just in the cold knock on our door, the quality is quite low.
Yeah, this
I agree with
too. How about for the rest? Yeah, Bob, please go ahead.
I agree with what Mihaly just said. You know, if we, every now and then somebody will pop up and we'll take an interest in it, but if you're just coming in cold, mostly they aren't very good leads. I mean, they do every kind of thing under the sun, but a qualified lead coming from someone who understands healthcare or medicine, someone we know or we've done business with before, is going to be the primary source of these kinds of leads.
Thank you. And Michael, do you have any thoughts to share on this as well?
Well, it's pretty much the same. I mean, of course, as I said, you know, we looked at more than 4,000, and if you look at that, there are a lot of cold calls in there. But then at the same time, you know, there are, you know, if you're talking about how did the 45 that we invested in get to us? I think they've all been either serial entrepreneurs, or we worked with them before, or very often they come to us at a very early stage. And you have to keep in mind, as basically we have the span from, a startup garage at Comdirect, which you have an idea, you bounce it off, and we have the very end at investing 20 million plus at the Series A, Series B, single tickets, or 200, 300 million euros or dollars. And depending on who you hit, we're going to allocate between the various funds and being in the right direction. But I would say most of the investments, all of the investments we've not had a situation where we didn't know that this company exists, or that they're looking for money. So very often we are in an early stage and talk to them and say, listen, you're too early, you have to do this and this, get this traction, get the right, maybe something's missing in your team, and then they come back 2 years later. So obviously, we follow them.
Thank you. Rabab, do you have anything to add?
Not really. I think it's the same as everyone has said. Nothing to add to that. Thanks.
Thank you. So I think for all the startups here, this is the point that we've been making in a lot of our events, that, we do a lot of events for founders as well, is that it's very important not to do cold outreach, right? And I think we have a confirmation from our investors here in terms of being able to be recommended by somebody makes a, it's very important. So I want to thank the panelists so much for your time, for sharing your thoughts and expertise on the importance of co-investing and how you develop your pipelines. I've learned definitely some new things today. I think if I ever want to start a company, like another company, I'm going to do it in Eastern Europe and wait for the VCs to knock on my door. And so this was quite a revelation for me as a US entrepreneur. And now I want to pass it to Elena. We're going to start with the pitching portion of our event, and we will be inviting startups to go to their breakout rooms, and investors who are interested to talk to them go to the same rooms. Elena, please take over.
Okay.